coding is going to be like doing arithmetic a long time ago. It won't be as interesting or valuable. Humans won't be doing that much of it. But I think it's very valuable to train your mind how to think. Like if a kid's asking what to major in today, my answer would be like, do pure math or physics, which are the maximum ways to train your mind to think or learn huge social skills.
We got Shaun Maguire from Sequoia Capital coming. Oh, what's he wearing? What's he wearing on the hat?
There he is.
I got so excited about the hat. I forgot to do the ad read. NumeralHQ.com. Sales text on autopilot. Spend less than 5 minutes per month on sales text and flight. Okay, thank you. Now we got Shaun. Sorry. I saw you on the preview screen with the hat. I got excited. I brought you in prematurely before I could do the ad read. Anyway, how are you?
Good to see you. Big week. Sequoia Capital.
Yeah. Actually explain what happened, some new funds raised, but how do you frame all of the actual progress and the actual announcement? Like what happened?
What is up, boys? You guys have become celebrities since last time I was here. You got Satya Nadella, you got all these legends, and then jokers like me.
Well, you kicked it off.
Anyway, it's been amazing to watch. And yeah, I got the hat. I'm repping for you.
Thank you.
And I got to say, this last guy had the best Zoom and audio setup ever. And, again, I'm just on my MacBook.
Well, no, this is your zone. This is your zone when anytime there's controversy on the timeline, you just flip open the laptop, hit record, 30-minute video.
Single take. With
one take.
And this is what people want. They want something that just feels like, okay, I'm actually talking to the person in their office. I get the texture of what their life is actually like. I'm sure this is what tons of founders see when they pitch you. They open up and this is who's on the other end of the line, right?
Something like that. It works to be somewhat relatable.
Yeah, that's great.
Yeah, so look, we're dropping new funds.
We're
very lucky. Sequoia's been in business for over 50 years. This is the next vintage of our flagship.
Overnight success.
Overnight success.
Sequoia's backed a couple small companies in the past. First investor in NVIDIA. Series A of Apple, Series A of Google.
Let's go.
On and on and on. Next venture fund vintage dropping. Venture fund 19. Also seed fund 6.
Wow.
Seed is something that we used to combine inside our venture funds, but wanted to place a major emphasis on it, really just show the distinction. And I would say, so anyways, fund size, 750 million and 200 million for seed. Something that I think is...
Wait, and is there a growth fund as part of this? Is that a separate thing? Is that off cycle right now?
Yeah, so the growth fund is different cycle.
Okay.
Announced their funds recently.
Got it.
Something that I'm honestly very proud of. I joined Sequoia 6 years ago, and I feel like this is the first fund cycle where we really have like a new team, a cracked generation of young people, and that have now been working together for 5+ years. And so it really feels like we're firing all cylinders. We got Stephanie with skilled on stage with Jensen yesterday, and Reflection. We got Constantine hitting his stride with Expo and a bunch of other companies. We got everyone on the team has some amazing portfolio companies. And then the growth team, you have so many great people, Pat, Andrew,
Andrew taking
David,
companies public
Sonia,
every day now.
Ravi, et cetera, and a whole new generation there too.
Any specific kind of like decision making or insight around like how you guys decided kind of the fund sizes specifically? Was that I'm sure based on a lot of learnings over the last few years and seems like a commitment to like driving like real venture returns and staying committed to that. But what more can you say there?
Yeah, no, you nailed it. Something I think people kind of misunderstand about Sequoia. And I got to drop the flex, but Sequoia has this outsized history in terms of the scale of companies we've backed. Like if you look at the NASDAQ, about 30% of the NASDAQ by market cap were early Sequoia, companies. Pretty wild.
Crazy.
But we actually don't invest in that many companies per year. We really try to keep it pretty focused and targeted where we can be active company builders. And there was a pressure the last few years. And I would say we got caught up a little during the COVID era as everyone did. And our pace increased. But we've just gone back to basics, and we're really just focused on ultra high quality, like finding just true outlier founders that have really big vision and kind of rolling up our sleeves to help them build these companies. And it's just we're trying to not get too caught up in any of the trends. We're trying to be like ahead of trends and keep the fund size just where we can actually have. We strive for minimum 10x net returns. Like that is our goal for every fund, and that's where we want to be.
What about actual team structure, team size? Has there been any evolution in the thought process around how large the partnership is, how large the support structure is, the back office, how all of that fits together? Is there anything that's structurally changing, or do you see it as like kind of just a slight evolution of the same plan?
Great question. So we have to be paranoid at Sequoia. Like that's our secret, is being ultra paranoid and just trying to outwork everyone.
Yeah, didn't a Sequoia founder say that?
Something I hope so.
I think so.
But we went through a pretty hardcore generational transition, 5-6 years ago. Yeah. Most of the team was not here 8 years ago. You have people like Rulof and Alfred that have been here for a long time on the early team and kind of have helped, and Doug, when he was active, helping to kind of bridge the generational divide. But I would say where we've innovated is kind of with new team, and then otherwise really trying to just stay true to the roots of Sequoia, active company building, focus on both, like really trying to understand market structures and find outlier founders. I think that's something that's different about Sequoias. We're not like an or, it's not founder or market, it's an and, like we want founder and market. In terms of everything else, I would actually say we've almost gone back to basics a little bit more. Like, we have a wonderful operating team. And that's something that, we built up over the last 5 or 6 years, but we've basically kept it pretty steady in terms of size. Like we feel good about where everything is, and now we just need to execute.
Okay. Defend the venture capitalist, because I'm going to make the argument that the venture capitalist, not Sequoia in particular, but venture capitalist, an entire category is cooked, chopped, destroyed. It's over. The game's over.
Agreed.
And here's my thesis.
What was Rolof's quote the other day?
Yeah.
It's not an asset class. He said venture capital is not an asset class, which I 100% agree with. It was a great quote.
He said it's a reward-free risk.
It's a reward-free risk. That's a great quote. But specifically, I want you to address this kind of, maybe it's a headwind, maybe it's not. You tell me. There's this idea that you are a venture capitalist. You can see the future. You know that self-driving cars are coming, and your options are Waymo and Tesla. Like, you can't get venture exposure to that necessarily. You're excited about humanoid robotics. Well, Tesla's in that. You're excited about AI. Well, like, if you wanted to play, like, OpenAI took $1 billion from Microsoft, and all the VCs were getting in small slices. No one was able to build a 30% position in that company like they would have done in the previous era with a Facebook or with a Google.
John was texting me last night joking. He's like, it's absolutely criminal that Satya didn't get carry on the OpenAI investment.
Yeah, and I mean, I don't know your thesis on quantum computing. It feels very early.
I led the Series A in IonQ, which is a public quantum computing company.
Let's go. Okay.
And I did my PhD in the quantum information.
So maybe that works. Yeah, maybe we need to go there. But it feels like there's also competition from big hyperscalers in that market as well.
We need the Martin Shkreli, Shaun Maguire debate on quantum.
Oh yeah, so we definitely need that.
I'm actually closer to Martin in a lot of the views.
Yeah.
So
maybe it would be an agreement.
Like the Martin Shaun conversation rather than
yeah.
Okay, so let's table quantum particular in particular, and let's instead say how does venture capital play in a world where frontier technologies take $10 billion and 20 years to mature? Self-driving cars, AI, et cetera.
Look, I think Rulof nailed it when he said that venture capital is not an asset class.
Yeah.
But we don't do it the way other people do, And granted, there's a couple funds I respect unbelievably deeply that have a lot in common with us.
A couple.
But look,
There are only two other people I respect. There are two people I respect.
And there's a couple funds, but look, we're really deeply involved oftentimes in like the formation of companies.
Yeah.
I think in the last year, there's been at least 5 or 6 companies where we signed term sheets where we were involved in the putting together of companies like before they were even incorporated. We were kind of structuring the companies, bringing the founders together. My partner, David Kahn, played a big role in bringing Kela together, for example, which is an Israeli defense tech company where, there was a very talented founder that a bunch of us knew, Alon Dror, who had a general idea, but he didn't have the right team for it. And I would say his initial idea was wrong. And we helped him with the idea. And then David had a vision of bringing this woman, Hamutal Meridor. And that combination is magic. And I really, it's hard to explain how frequently we do that. Yeah. And so it's like, if you're a passive investor at the late stage, there's no alpha today in VC or very little, but that's just not the game we play. We're extremely active. I mean, my partner, Jim Getz, incubated Palo Alto networks. Yeah. Ruloff both invested in YouTube with 3 people and they worked in the Sequoia office in the beginning. And I mean, I can give you so many examples like this. And so we don't think of ourselves as just like an index on the basket. We're trying to like bend the arc on the asset class. And look, I'm going to give a shout out to Founders Fund. Like they do this incredibly well. They've been incubating companies. They bring a founder mentality. Yeah. They're more passive. Later stage.
Obviously like Sequoia and Founders Fund, incredible returns. Like the model's clearly working. I guess maybe it doesn't matter that Sequoia and Founders Fund, like, I don't know, all the funds, it just feels like there's a world where self-driving happens or some other big, huge humanoid robots. It happens, but it happens in a way that the value isn't captured by venture capitalists. And that's what I'm wondering.
I'm not worried about it.
You're not worried about that.
Honestly.
Okay.
I'm not worried about it. I think there will be a lot of value captured in the public markets. Like one of the best trades you can make in AI the last 5 years was obviously just buying NVIDIA. Yeah. The same was true with crypto though. Like you could just buy Bitcoin. Buying Bitcoin outperformed basically every crypto investment. Yeah. But Coinbase was still an amazing investment. I think Bitcoin, like at almost every point in time, slightly outperformed Coinbase. Yeah. Maybe not.
I've heard from investors that's why they passed on Coinbase, because they were like, I'll just buy Bitcoin. And
it's actually a big part of why Sequoia passed on Coinbase in the time. Yeah. So look, like I think we've seen this play out many times before, but I'll give you a counterpoint.
The funny thing there is that the reason why Bitcoin has done so well is probably because there were VCs that were like, yeah, I'll pay for the R&D at Coinbase to make it accessible. And then the price went up. And so everyone else you and FF were free riding maybe.
Yeah, we were. There's always been this dynamic though, like the famous telco build out in the late 90s where Global Crossing and all there were 17 fiber companies that went public and were very highly valued, and then investors lost all their money. Yeah. But that fiber build out laid the pathway for, SaaS and then consumer internet companies in the early 2000s. Like this dynamic is always happening. And I think as investors, we just have to try to stay countercyclical, try to stay ahead of the bubbles, try to figure out what are the second order effects of the bubbles. Like whenever you concentrate huge amounts of capital, there will be all this new infrastructure that you can take advantage of. And so we're just, like defense tech is an area where we were not very active in before the war in Ukraine. And tragically, that war was a catalyst. Yeah. And you have to identify, like, even though you have a catalyst, there's probably only a 6 to 12 month window where defense tech is non-obvious. And so like we made 3 or 4, I think, really good investments in that period, like Neros, like Stark, like Kela a little after that. And you just have to be ahead of the curve because like now I think defense tech is becoming
consensus.
It's too obvious. And so it's like valuations are incredibly high, but it's just like that's our job at Sequoia, is to be ahead of the curve on these things. And there's just always going to be opportunities to make money if you're proactive.
Venture capitalists buy minority positions in companies, and you can be on the board and you can be adding value and helpful. But there's this, after you kind of deploy into a company, there can be kind of this grass is always greener thing where it's like you can meet like another 5 companies the next day and there's always like this influx of opportunity. You've been at Sequoia now for years and you have an opportunity to meet new companies every day or get on the phone with existing portfolio companies, some of which are maybe doing really well, some of which are maybe not. Like I was curious if Sequoia like has any lessons throughout history of companies that like that you guys draw on, of companies that kind of like hit rough patches and people were maybe less excited about, but like found a way to have, get to another kind of inflection point. Because I feel like you have 50 years of history. A lot of being a great firm is just remembering what made you great and having these sort of like lessons that are like IP effectively.
Oh man, this is such an astute point. And look, I think this is one of the superpowers. I think Sequoia has a lot of superpowers. One is we just have this network. A lot of the founders we back were employees at, prior Sequoia portfolio companies. So there's that flywheel. There's like the institutional knowledge, moat. There's just like there's a customer moat where there's so many companies that, someone that bought Wiz early and it made them look really good as a CISO or CIO, like they're more likely to buy like Eon, the next infrastructure company. Huh. So there's all these moats, but or advantages. But on this one, incredibly astute point. Alfred Lin tells a story of how DoorDash really struggled to raise like at least 1 or 2 rounds of funding. I'm sure you remember like Uber was the hottest company in the world for a long time, and DoorDash was like number 3 or so in the space. It was really hard for them to raise. I think it was a Series C. I may be off by like maybe a Series B or D, but I think it was a Series C. He tells the story all the time.
Postmates was pretty hot as well. And then
Postmates was hot.
There were a bunch of legacy platforms like Grubhub and companies 100%. That had been around before too.
So it was a bloodbath. It was ultra competitive.
Instacart
unit economics hadn't yet become positive. Yeah. They really struggled to raise the round. Airbnb, obviously, like Sequoia was the first investor or led the seed round. Sorry, not first investor. They did YC, but we invested $600,000 at like a $3 million valuation, and they went through some incredibly hard times. Even like during COVID. I mean, for them, I remember Alfred's updates. It was just unbelievably brutal period. It was like easy to give up on them, and that may sound crazy given the scale they're at today, but also with Elon, like SpaceX and Tesla were on the verge of death at multiple points. And when you have these experiences, like it really is an institutional knowledge, like, weapon.
Because it's just not, it's way less, it's way less fun to jump on the phone with a portco that's like totally struggling. And they're going to say like, hey, we need a bridge, or can you introduce me to some more investors? And it's like, well, it's not fun to introduce a company that's struggling to other investors because it's way more fun to introduce a company that's ripping because you're like, throwing a bone to them. I was curious to get a sense of like your activity in H1 of this year versus now. Have you picked up the pace? Have you slowed down at all? What's it been looking like?
I'm embarrassed. I saw the data recently, like a few weeks ago, but I have so much going on, including a lot of, Twitter drama, as you guys see. And somehow I don't remember the exact pacing data. And so I don't want to be wrong. We're a registered investment advisor now. So these things are, like,
this is like doubly hard
when we're wrong.
Every time you come on, I want to ask you about stuff that you can't talk about because of RIA. Yeah. And I don't care about whatever you're going viral for on Twitter. Can you talk about data centers in space? You're a Caltech PhD. Man. Do you understand it? Does it make sense to you?
Am I Team Delian or am I Team data
I wasn't gonna make it about that. You could be. You could comment on it at a more abstract layer. Level, but you're obviously a big space investor.
This is something I've thought a lot about. Yeah. I mean, like for 15 years, I started a failed space launch company in 2007. So wow. And this is an idea we actually thought a lot about. Look, I think the reality is no one really knows. Yeah. And actually, something I told Delian with Varda, like I passed on Varda in the early days, which I should have made the investment. And the way I describe it to Delian now is I think he had the right macro idea and the wrong micro idea. Yeah. And to unpack that, like the micro idea is they wanted to make ZB LAN, this like ultra pure, fiber optic cables. It's like, dude, we don't need ZB LAN in a world with Starlink. We're like, ZB LAN's good for long distance data movement. We're gonna do it all with Starlink. The long distance data movement is gonna happen in space with Starlink. And but I think the macro idea of just building space infrastructure, building an incredible team, building, like learning how to build satellites. I think that their timing couldn't be better just in terms of what's going to happen to the space economy over the next 10 years on the back of SpaceX and Starship. And I think their ability to just concentrate talent and be in position to pounce when the opportunities come up is something that should not be underestimated. And so with these data center companies in space, there are two very real serious unknowns. One is like just the thermal properties. Dissipating heat in space is insanely hard. And anyone that says they figured it out right now, like they have not figured it out. They may figure it out and it's
because you need a lot of surface area, right?
There's basically there's like no thermal conductivity or very little of space as a medium. And so heat that leaves any unit area or whatever in space, it stays close to the satellite in space. And so you can move things around inside the satellite, but once heat leaves the satellite, it'll just heat up a little local pocket of space around you, and takes a very long time to dissipate away from the satellite. And so like this is something no one really understands how it works. The second is you have to deal with high energy particles that are going through your electronics. You don't have the Earth's magnetic field shielding your electronics, and you can have metal shielding and things like this, but no one really understands how this is going to work and how it will affect all the circuits and electronics. So these two things are hard. There's also like a big just time question around exactly when Starship will fly, like when cost will be passed to the launch companies. So I think some of these companies may be too early. And look, I actually think I'm more team Delian on the micro. Like I think he has the right points that there's a lot of things that are unsolved right now on the micro side of data centers in space. But I'm such a macro bull on space over the next 10, 15 years that it's hard for me to bet against any team that is just building that concentrate talent, building the expertise. Because I just think it's going to be such a exponential rising tide at some point in the next 10 years. I can't tell you when that will start, but it will be big.
On the SpaceX front, how there's been a lot of news over the last few weeks around direct to cell partnerships between SpaceX and other device manufacturers, et cetera. How screwed do you think a lot of the big telecom companies are over the next 10 years?
Look, I don't think they're screwed. I think that I think SpaceX is going to do unbelievably well. And I'm maximum bull on direct to cell for SpaceX. But I think what happens, in the kind of most wild success scenario for SpaceX is providing 20, 30% of the world's mobile data in a decade or so. Yeah. But I think that the total mobile data consumption will be double at that point. So it's still a 70% net increase for all the existing telcos. Because this is just a fact of history. When a product gets better, people use it more. Yeah. And when you have the ability, when you don't have dead zones in cell service, when you have 5G everywhere, Optimus is going to come online. Tesla cars are going to come online. People are going to be, when you have really good mobile connectivity from the car, you're going to be streaming instead of 1024p, you're going to be streaming 8K content from your car while it's driving you. And so I think it's going to be one of these things where rising tides lift all boats, but I would not underestimate how big of a deal it's going to be for SpaceX.
Yeah. It's already an oligopoly, but there are multiple $100 billion companies in the category. And so if it just becomes, even if the market structure doesn't change and there's just a new player in the oligopoly, that looks very, very good. We've asked a lot of people in the age of AI, should you learn to code? That's a less interesting question to me these days. I want to know, should you learn to deal? Should you learn the art of the deal? Because basically, is the art of the deal becoming a more important tool in the founder's tool chest? Because
Not the
we've
book
seen
specifically,
so many, so many. No, it really feels like there are founders out there who can just work magic and marshal capital and buyers and customers and the government from a different country, and they get 17 people to say, yes, this has to happen. And then all of a sudden it happens and we get the thing. And it feels like it could be the beginning of a new archetype, a new founder archetype, or maybe it's an old archetype. But what do you think about learning to deal?
Yeah, look, I mean, first on the learning to code, I personally think that coding is going to be like doing arithmetic a long time ago. And it's just like, it won't be as interesting or valuable. Humans won't be doing that much of it. But I think it's very valuable to train your mind how to think. And so a lot of like learning to code.
Like thinking, is that kind of like thinking mode?
Yeah, thinking mode, deal mode. Yeah. But look, I think like even more extreme way to train your mind to think is doing pure mathematics. And so like if a kid's asking what to major in today, I mean, my answer would be like, do pure math or physics, which are the maximum ways to train your mind to think, or learn huge social skills, like just don't even go to college. If you do, be frat president.
Our intern over here, our intern at TBPN is on a gap semester studying physics and is now hanging out here. And he's just like nodding, just being like, I'm patting myself on the back. Shaun Maguire says I did everything right.
Curious, kind of last question. I wish we could hang out longer, but we're back to back.
I'm going to come to your Thunderdome soon.
Yeah, please.
Yeah, next one should be in person.
Yeah, anytime you're in LA.
What are you seeing? How is the government shutdown affecting defense tech companies that you're seeing or talking to?
Oh, yeah, that's a good question.
I'm going to give the brutally honest version, which is what I try to always do, at least my own opinion. It's a tale of haves and have-nots. So I work with a few companies that are, getting absolutely reamed by it. But I also work with a couple companies where it hasn't really affected them.
Yeah.
And basically, like, if you have something that the government absolutely needs, like maybe they can't send you the money right now, but they're still giving you the phone call and telling, telling you that
giving you
this
the
is
signal.
what you should expect after the shutdown ends. And, we can still give you the award. We just can't, tell you the exact dollar amount because we need congressional approval on the exact dollar amount. And it's a tale of haves and have-nots.
It's a really good signal, to be honest, at least as an investor, to be like, is what I'm investing in a nice to have or a need to have?
For sure. It's very clarifying.
Yeah.
Very good.
Cool. Great to catch up.
Always fun. Congrats on the new. We need to ring the gong for Sequoia Capital.
Yeah. They
no
deserve
one
a gong.
thought this would happen.
Two gong hits for the two new funds. Still got it. There we go.
Thank you, boys.
Great
you guys
to
are
catch up.
legends. Keep crushing. Bye.